Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
It's your boy, no, sorry, it's your daddy, Mr. Macaroni. Keep watching Crypto TV Plus if you want to be doing well, especially. You get me now? Alright, you're doing well.
Hello and welcome to the program. You're watching Inside Blockchain live from Crypto TV Plus. It's another wonderful Monday morning. The African crypto market has grown exponentially to over $100 billion market between the months of July 2020 and June 2021, and advancing in the year 2022, we've seen a lot of sporadic advancements, revenue generation, and all that, and so far, when we look at the Nigerian cryptocurrency community, we've seen a lot of actions, a lot of sanctions by the government. Some people perceive it to be that the government is stifling innovation. But more recently, we learned of a new document that was released by the Securities and Exchange Commission that provides guidelines and regulations to digital asset providers, more specifically cryptocurrency investors. So today on the Inside Blockchain, we want to look at this document and also explore some of the implications from a legal perspective as well as from a financial perspective to help the investors out there, crypto traders, and even the community at large understand what this document, stands to provide. So joining me in this conversation, I'm not alone as usual, is a very sound legal practitioner. But before I bring him to your screen, we'll go on a quick break. Stay with us.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back. If you're just joining us, this is Inside Blockchain live from Crypto TV Plus. And yes, as I mentioned, today we'll be looking at the new document that was released by the Nigerian Securities and Exchange Commission, the SEC, providing a certain regulatory framework regarding digital assets as well as cryptocurrencies. And joining me to explore this conversation is Olaleye Oladimeji. You're welcome to the program. Oladimeji is an international technology lawyer, a blockchain advisor, and he's also the lead advisor at the tech advisory firm Legalpreneur Consulting. Ola, you're welcome to the Inside Blockchain once again.
Hi, it's a pleasure to be here. Thank you for having me.
Yeah, that's fantastic. So this is not you're not a stranger on this show. This is actually your second time on the Inside Blockchain. So I believe we should just dive right into the conversation. Now, what's your take on this new regulation by the SEC on digital assets and cryptocurrency? Keeping in mind that over time, you know, specifically on the 5th of February 2021, the CBN released a circular prohibiting banks from facilitating crypto transactions. And now we're seeing a document, you know, providing a regulatory framework for digital assets. So just briefly, what's your take on this new development?
Yes, thank you very much for that question. I mean, this is what we all have been looking forward to in the industry. We've been looking out to see the SEC and other regulators actually come into action and release proper rules to guide blockchain related companies, especially those particularly relating with cryptocurrencies. And it's a very positive development for the industry. And primarily looking at the fact that for a sector which such as blockchain, we need to have proper regulations, and investors need to be protected. And from what the SEC has done, they released these rules to cover the companies that are offering digital assets in terms of issuing tokens, looking at companies that are categorized as VASPs, virtual asset service providers, which is a broad classification that covers digital asset exchanges, launchpads, and so many other categories.
Offering platforms, yeah, exactly.
Yes, and yeah, so some of these, you know, like launchpads would classify as a digital asset offering platform, for example. So, you know, we need regulations in these different lines coming in, and the SEC has taken a very positive step in the right direction, and the international community are actually glad this is coming into place, though just for a bit of some of the requirements that we're seeing there, which some of the startups may find a bit tough to fulfill in terms of the requirements that are provided, especially the registration requirements, the corporate structure, and other things that
exactly.
For them.
Yeah, we'll get into that. We'll get into that conversation shortly. So, from a legal point of view, you know, we've seen some of the new rules. Just like you mentioned, there are various digital asset players in this case. I'll just list them out for better clarity. Now, that it includes digital asset offering platforms, which includes launchpads and IDU platforms, like you mentioned, virtual asset service providers, which include crypto projects specifically, digital asset exchanges, which in a larger sense includes crypto exchanges, and also digital asset custodians, which includes brokers. Now, just like you mentioned, some of these rules, there are different provisions, there are different highlights in these documents that are a bit stringent and a bit tough for people to follow. So from a legal point of view, I'll just take one key highlight from this document, and we'll just, you know, continue with the conversation. Now, one key highlight here is any crypto project or virtual asset service provider may only raise funds within the limit of 10 billion naira. Now, from a legal point of view, what do you think are the legal implications of this particular highlight?
Yes, thank you for that. Well, we have to assess what could be the motive behind some of these terms and these rules that were released. You know, now mentioning a limit to what can be raised. Now, I would envisage that maybe because of the risk of maybe blockchain startups raising way more than they need, because to be honest, we understand that there's a whole lot of liquidity and a lot of fundraising funds are going to some of these projects lately, and so many projects take way more beyond what's their capacity, what they need. But there could be other ways to control, in my opinion, in my personal opinion, there could be other ways to control what the limits could be for each project, because there will be an initial assessment filing, which would also be would reveal some of the information in terms of what the company needs the money for and how much exactly they are raising. And if it's justifiable, fine, let them go ahead if they need way more than that amount, because some projects are quite capital intensive. And at some point, looking at when they raise probably in USD value based on the rate market rate at which Naira is selling for now, you would have to consider and factor that in presently. So, well, it could be a term that is restrictive and just basically protecting investors. Some people that just raise projects that raise funds and eventually have too much money at hand and aren't even able to deliver eventually, just to eliminate that risk. I'm guessing that is the sense behind making that particular rule. But there are still other ways to control it. There are legitimate projects that require way more liquidity beyond the amount that I was stated, which is 10 billion. But I guess startups could definitely have the option of reverting to doing an equity raise additionally if the funds are not sufficient enough to cover whatever project offering they are working on.
Okay, that's fantastic. Simply amazing. So let's look at one more thing. This is actually the very crux of the matter. Now, according to this document, there's a provision that states that some of the fees that will be paid by crypto projects, in this regard. Now, some of these fees, the SEC requires that they file and pay. The fees include but are not restricted to an application fee, which is around 100,000 naira, processing fee, which is around 300,000 naira, registration fee, which is over 20 million naira, sponsored individual fee, which is around 100,000 naira, and then minimum paid up capital, which is over 400 million naira. And I want you to look at some of these fees, that are included in these documents. Don't you think it will actually, it's more of some startups may not be able to come up with that actual amount of money. Now, how do you address this issue? What do you think is the future for some startups that are just coming up, and trying to raise capital from a legal point of view? How would you address this?
Thank you for that. Yes, it's definitely a concern. When I went through the rules and I noticed the amount which they require for some of the startups to pay up, many of these startups are unable to actually fill this amount. They can't fill up like this amount based on probably they're at an early stage, still doing their pre-seed and trying to bootstrap at that point. So it's definitely a concern. It's definitely a concern which even investors, in fact, funny enough, I was in a call yesterday with some potential investors who have been looking into Nigeria. But with the rules coming into play, they had to reconsider some of their positions in terms of how much they would be required to pay for the registration, the structure they would have to choose in terms of their minimum share capital being a minimum of 500 million naira, and all of those, because they will pay stamp duty on this amount. Stamp duty is valued at 7.5%. Yes, so there are some of these concerns. So I hope this would not be a loss for us in terms of the fact that some of these startups, which they have been exploring during the period when there was restriction, would have to go to offshore locations to go and incorporate entities to actually raise funding. Yeah, so because what we're trying to do, based on even the national blockchain adoption strategy by NIDA, we're trying to attract investors. Yes, there are ways where we can, the economy can benefit, and the federal courts can benefit from, taxing and getting payments from some of these issuers and other projects that are even in existence in terms of licensing requirements. But it should be on an evaluation based on the size of the business they do and what they are purporting to do. But we should actually appreciate to an extent to what the SEC is trying to do here, because financial services, which most of these companies use cryptocurrencies, that issue cryptocurrencies, which they mostly deal with financial services, are, are quite delicate, and there needs to be that assurance in terms of there being enough liquidity for you to actually conduct the kind of business which you envisage, you purport to be doing, basically. So that's part of what they're doing in terms of trying to put in checks and balance in place. So we understand there's a
So
sense behind that.
in essence, what I'm getting from what you're saying is, in essence, what this simply means is that you need to have over 540 million naira to be able to start up a crypto project in Nigeria, courtesy of the SEC. Do you think that is an okay thing? Do you think that is actually palatable or suitable for new startups? Because approximately that's the actual amount you need. You need over 500 million right now, in line with this document.
Yes. It's definitely a dampener for startups that are trying to come into the Nigerian ecosystem, because there are less stringent requirements in some locations, so many other locations. So what we're trying to do in Nigeria,
it's simply outrageous.
yes, of
simply
course.
Outrageous.
So in Nigeria, we're trying to we're trying to attract investors and foreign investors and even local players, but we're making the entry barriers are quite rigid. So that's a concern. We should try to make it as flexible as much as possible. If this was rather based on a case-by-case evaluation with probably a limit on let's say like you could have probably for the registration fee, let's say they assess what you're trying to do, the kind of liquidity you're trying to raise in the capital market. Now at that point, they could give you an assessment that would match what exactly you're trying to do. So okay, rather than you paying a registration fee of 30 million naira, based on what you're doing, you can pay a registration fee of, let's say, about 5 million naira, 10 million naira. Now, still, this would be a challenge because a lot of these projects would have to go and explore registration in other locations, or have to bring in a whole lot of foreign investment for them to be even able to afford some of these fees.
Even secure funding.
Or even secure funding at all. And trust me, like in other jurisdictions, it's way much easier for them. Some jurisdictions are quite straightforward. All you just do is once you're registered, you just pay licensing fee, and you whatever you raise from the your raise token sale that you do, your pre-seed offer, whatever stage you do it, where you are issuing your tokens, it is taxed at the particular rate. Like Anguilla taxes at 1.5% of whatever you raise, apart from the registration fee, and that's all. So you can raise without any cap. I believe there's no cap on that, basically. So these are some of the things that we need to actually put into considerations, and not so there won't be capital flight from Nigeria. Basically, we need to make it a hub, that would encourage and attract crypto startups based on easy entry requirements.
Exactly. There's no simple way of putting it. We have our work cut out for us. So we'll go on a quick breaker. Coming up, we'll talk a bit about the Terra, Luna, and UST collapse, as well as the fact that there are over 44 nations currently in El Salvador right now for a financial inclusion conference. We'll pick it up right after this commercial. Stay with us.
Running 1,000 miles per hour is no joke, but I have so much energy now knowing that I get to earn while doing it. Which brings me to the Move to Earn Metaverse project I'll be talking about today, Calo. Welcome into the Metaverse on Crypto TV Plus. Launched in December 2021, Calo is a Metaverse and Move to Earn application that you may or may not be hearing about for the first time. It features a blockchain system that provides users with a chance to work out on a daily basis, either in a single or world challenge mode. Calo also...
Hello, my name is Chiki and I'm the Bo of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back. Thank you for staying with us. This is still Inside Blockchain, live from Crypto TV Plus, and today we're taking a closer look at the SEC's new regulatory framework for digital asset providers in Nigeria. as I'm joined virtually by Olaleye Oladimeji, an international technology lawyer, a blockchain advisor, the lead advisor at tech advisory firm Legalpreneur Consulting, and a good friend of mine as well. So before the break, we're actually exploring some of the key highlights of the SEC's regulatory document on crypto asset providers in Nigeria, and we arrived at the conclusion that we listed some of the financial involvements. And approximately speaking, right now in Nigeria, you need over 530 million naira to be able to start up a crypto project, courtesy of the SEC. Simply amazing. So we'll move on a bit, and we'll talk a bit about the Terra Luna collapse, because we understand that this particular collapse has led to a lot of speculations in the global space. People are wondering why this giant project would actually experience a collapse like this. Dimeji, can you speak a bit about some of the implications of this Terra Luna collapse? Now, we learned that recently the parent company behind these two projects, Terraform Labs, was recently fined by a South Korean watchdog. You know, they were fined over $78 million for tax evasion, and people are, a lot of speculations coming up. You know, that trust, that confidence that people have in most crypto projects, you know, is starting to dwindle. So from a professional point of view, from a legal point of view, what is your take on this scenario?
Yes, thank you very much. It's quite saddening seeing what's going around in the media.
But I hope you didn't lose any money from Terra Luna before you
No,
I hope you didn't lose any money from it. Okay,
no,
that's
not
good. Proceed,
at all. I'm not really into that. So
okay.
For Terra Luna, you know, the project was in fact I understand it was one of the top 10 projects on CoinMarketCap.
Exactly, on CoinMarketCap,
for the
yes.
crash. So Terra itself, like Terra Luna had its own chain. It's more like a gem project, just like Ethereum, Bitcoin, and you know, it had its own chain. And it's a very big one, and it took everyone by shock. But looking at what, you know, where the problem arose from, looking at their stable coin, and you know, it's not the usual stable coin you would have, like it's an algorithmic
stable coin, yeah.
Yes, not particularly pegged to the USD alone. You know, it's a whole lot of other variables coming into play in terms of determining the value. So, you know, in terms of stablecoin, this kind of collapse, this is basically what the worries of regulator. This is like one of their primary worries and concern, especially when it comes to stablecoin. And now this gives a case where we have to analyze and really look at regulation of stablecoin, which is a main concern for regulatory bodies, especially the SEC and central banks worldwide. You know, stablecoins, looking at auditing requirements for them, what kind of standard do they put them to? Because investor protection is the main focus of regulators like the SEC. That's why some of these requirements are put into place. It's not really, you know, just there to just to make probably entry requirements just tough. It's more of a situation of how can we protect investors in a situation where, you know, this project crashes. What is the recovery plan for you to actually take care of your investors? Limit investors, yes, limit investor risk. These are like some of the major concerns, limiting this investor risk. Now, looking at the Terra Luna crash, a lot of people have lost their money based on what would tag as a very woeful failure on their own part for them to actually be able to secure their own token. The Luna token crash, the UST token crash. I mean, it's quite surprising when a stable coin that is meant to peg to the dollar, one for one, $1 to $1 to $1.
Exactly, it pegged all the way from $1 to, you know, 69 cents.
Quite surprising. Like a few days ago, I remember saying that, you know, now one UST, which should be $1 now, is about 18 cents. Like, how does that even happen? Like, how do you do that? So, you know, it's the primary thing now to look at is regulation of stable coins. There needs to be a standard for how stable coins can actually be issued. What kind of reserve assets can actually back them up? like the usual types where we have the USD backing up some of these assets, bonds, and a couple of other things, that are still more predictable instruments. Having more volatile instruments back up your serve as the reserve asset for your stablecoin, may not really be the best play. And with the kind of system they were operating, which are like algorithms running just under the reserve of the stablecoin and determining the value,
USD, yeah.
So we need to actually have a standard. A standard is quite necessary. What's the requirement for these stablecoin issuers? What's the requirement in terms of auditing requirements, making sure, okay, what kind of risk management are you putting into place? If you feel, okay, this your model can work, no problem, you can use your algorithm, but what are the risks that are in play that are antecedent to your project? Those have to be considered. So what are the risk mitigation policies that you have in place already? These are concerns that have to be addressed. And even in any traditional banking institution or system, the risk management is always key. In fact, there is a whole department that they always dedicate towards that. And it would be great to see more of this being implemented in blockchain companies and other types of crypto companies, where they have proper risk management departments, way beyond just having a compliance officer or a compliance system in place. Risk management is quite important. I'm sure if Terra Luna had a better risk management team in place, I'm sure probably they would have detected this issue prior
Pitfall,
to prior to it spiraling like so far, because it was at a point there were so many speculations like it was more of a coordinated attack, which rumors have been going on in the social media with people saying this was how it was done, saying buy Bitcoin, short the market and all of that, which led to the first crash and the first wave itself before people started panicking. And speaking about the Anchor protocol itself, saying they are offering 20% APY, which is quite an outrageous interest rate.
And some people are actually of the opinion that what they call themselves the lunatics, Luna investors. They actually denied that the Anchor protocol was more of a growth stunt. That they understand that particular APY rate was outrageous and it will be removed or reduced as the project advances. Some people believe that was even the main factor that led to the pitfall along the way. That's simply fascinating. So we'll just move on a bit. So we understand that over 44 nations are currently in El Salvador. El Salvador was the first country to make Bitcoin a legal tender, for those of you who don't know. So they are there for a financial inclusion conference, of which our very own Central Bank of Nigeria is part of. So what do you think, Ola? What do you think will be the outcome of this exercise? Now, in my opinion, I feel this conference should have come before the SEC's document. What are your thoughts on this? Because it would have better informed their decision on how to regulate digital asset providers, specifically cryptocurrency. Just share your thoughts on that, please.
Yes, thank you. Well, it's really, we really can't say, probably maybe the conference would have probably much difference in shaping, how the outcome of the rules itself will be. But yes, of course, we have to understand that the SEC probably did a good job to the best of their capacity. But now it's basically the central banks coming together, because they have to look at the future. What's the future for the financial economy? Basically, this is like a primary thing for them to look into. And I think the part of the team for this conference is financial inclusion and looking at how Bitcoin can actually change the roadmap for economies. That's like the primary focus for this. Now, with events like this holding, there is a need definitely for regulators such as CBN to actually understand how they can tap into this disruptive technology and what the future holds in terms of how the traditional finance can actually relate with
and transform
with DeFi, decentralized finance, which is part of the main concern for central banks. they know they won't, it's not definitely something, to be addressed publicly and all of that. Yes, though they've addressed it publicly and expressly they've stated, there is too much volatility. Like, how do you base a financial system? Yes, in trading and all of that, cryptocurrencies. So how do you base your financial system on this kind of currency? Though we expect, in the coming years, when more liquidity comes into the market, hopefully we'll get less volatility. But these are some of the concerns that they would have. Now, with central banks coming together and them actually being able to liaise with the central bank in El Salvador, El Salvador has adopted Bitcoin as a legal tender. Now, they will be able to discuss with this expert and actually understand what they have faced in terms of challenges and the pros as well of actually having adopted Bitcoin so far. What are the things that they could benefit? Some of these central banks could actually be able to determine these benefits for themselves. And for the few days they've been there, I understand they've had those conversations actually, how Bitcoin can actually work for them. Some of these representatives were even there, trying out the Bitcoin payment system with the Lightning Network, seeing how they can actually use it, how it's done, and how they can actually integrate it into their system too as well. So these are some of the conversations which they have been having. So with a country such as El Salvador that has already had that is already exploring Bitcoin itself as a payment system, and you're already, enjoying the benefits, though the downside to the market being in the bear market right now and all of that, they will be able to give assurance to other central banks. I'm guessing, that would be an outcome from that. The assurance they will be able to give to other central banks about how they can actually adopt and deploy blockchain payment systems in their economy without much concerns about it eroding the function of the traditional banking system currently in place. Yeah, so that's like a major takeaway from that conference. And in the coming years, we are hoping we'll see central banks actually take a stance, because the central bank is yet to take a stance subsequent to the release of the rules by the SEC.
Yeah, fantastic. I think the first step, in my view, would be to unban financial institutions to allow them, carry out cryptocurrency transactions. I think in light of the conference in El Salvador, that should be like their first line of action. So before we continue the conversation, we'll go on a quick break. And when we come back, we'll wrap it up. We'll try to look at some of the necessary things that cryptocurrency investors, crypto asset providers, and traders, have to look forward to in line with the SEC's digital asset regulatory framework. So stay with us.
The cool thing about NFT is 1 minute it can be about a tweet raving all over the place and causing all the money madness possible, or some digital collectible just randomly pops up. The Cyber Brokers NFT is tickling my fancy, and I'll be delving into it in a minute. Cyber Brokers was created by Josie Bellini, who was previously in finance, but she left that world to join the cultural revolution of crypto. Josie has been creating art that tells the story of the crypto.
Hello, my name is Chiki and I'm the Bo of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that dial. Peace.
Welcome back. Thank you for staying with us. This is Inside Blockchain, live from Crypto TV Plus. And if you're just joining us today, we're looking at the SEC's regulatory framework for digital asset providers in Nigeria. We've been able to establish a correlation between the CBN, the SEC, and what is obtainable right now in Nigeria, because a lot of speculations, a lot of concerns coming from different quarters. People are curious as to the implications of this regulatory framework that was released by the SEC. And I have here with me virtually an international technology lawyer and blockchain advisor, Olaleye Oladimeji. He is also the lead advisor at the tech advisory firm Legalpreneur Consulting. So Oladimeji, just to wrap it up, now you're someone who has been in the blockchain space for a while, providing legal advisory and every other thing you do, you know. So we want to understand, or the viewers out there want to understand, what should people look forward to? Now, over time, we've seen incidents like I mentioned when we started the conversation, the 5th of February CBN crypto ban, and subsequently there was a circular that was released by the FCMB bank regarding bank accounts that trade cryptocurrency, freezing them. And subsequently, we've seen so many things that have come up, not just in Nigeria, but on a global scale. You know, we've seen the China crypto ban, we've seen the Evergrande real estate crisis. What do you think people should look forward to? And by people, I'm talking about cryptocurrency investors, crypto asset providers, traders, and the general crypto community in Nigeria. Now, some people that have been in this space, the key players, you know, such as yourself, what do you think they should look forward to with some of the provisions of these documents? Just help us with your thoughts on that before we wrap it up.
Yes, thank you very much. So the expectation is subsequently going forward, we should be having a lot of A-grade crypto projects launching here in Nigeria. That's the expectation that we're looking at, because you know, there are a lot of projects that are full out there. So it's very important to do your own research. And the SEC actually took a risk-based approach in regulating digital assets of service providers, you know, in terms of putting in these requirements that will safeguard investors from losing their money unnecessarily. And it's quite important because of the volatility of the market and people needing to actually have an understanding of the project they are investing in, and not taking unnecessary investment risk. So it's really all for the best in terms of some of the limits and some of the requirements that they've put in place. Hopefully it's really for the best, but we're expecting them to do a proper assessment, and whenever they do such assessment, you know, they would easily be able to fish out projects that really are of no use to the space and most likely will rug pull investors. So investor protection is really the main part of the main aims for regulation. That's quite important, investor protection. So investors should do their research, make sure the project you're investing in, the people have the right capacity, they are able to actually achieve what they are proposing in their white paper, and do not invest way more than you can lose. Leave the big investment to the HNIs and the qualified investors as provided in the rules, because they are much more experienced in terms of financial investing and yes, investment analysis and all of that, basically. So it's quite important because of the nature of
Okay, so in as much as we can appreciate that the core focus here is investor protection, now what about the founders of some of these crypto startups in Nigeria at the moment? Is it just the investor protection that the SEC has at heart? What about some of these startup founders? What are their chances of being able to continue running, you know, some of their projects in light of this document?
Yes, that's definitely a concern. You know, it's a worry because, you know, they would have to get compliant for those that are existing, and for those that are coming in as a new project, they would have to match up these requirements. Though the implementation framework is still what we're looking out to, but yes, we should definitely still look forward and look out to have a liaison with the SEC. Because personally, you know, that's the approach we are taking internally in-house here, having to liaise with the SEC and see how, you know, some of these new startups can get compliant and have like a definite like a timeline in terms of fulfilling some of these requirements, so it doesn't affect their business, and probably they will have to abruptly end things here in Nigeria and have to go to another jurisdiction. So it's really coming to a round table and actually, you know, coming to a conclusion in terms of what, you know, is feasible, how we intend to achieve this compliance that you're requiring of us, doing the assessment filing and all of that. And for those that want to issue tokens, you know, there shouldn't be a worry if you are classified as an utility token. The worries should be much more for those who are considered as security tokens, because when you do an initial assessment filing and you're considered as security tokens, you will be treated as a security. That is that's the essence, and your issuance will be subject to much more stringent requirement in terms of registration. Utility tokens are usually not generally not under the purview of the SEC. So, getting within this compliant view is very important. That's why you need your lawyers. You need to be working with your lawyers closely.
Exactly.
So they can identify
that's why we have
the
you
best. Yes. So you can be able to identify the best kind of setup that will be within a compliant framework that can work with the kind of resources that you have and the potentials for growth. And some of these caps that have been put into place, they're still subject to the SEC. So with if the case arises where there will be a need to review some of these things, where there are provisions in the law stating the SEC would have a discretion to determine what will be applicable. Applications can be made and they can look into those particular cases.
That's simply amazing. Great stuff, Ola. Thank you so much for joining us on the show and contributing your candid insights. Thank you so much. So just to wrap it up, these rules apply to all platforms that support trading, exchange, and transfer of virtual assets. Now, all issuers and sponsors of virtual or digital assets, including international and non-residential issuers and sponsors, or any operator that targets Nigerian investors, just to put it out there, this document actually encompasses the individuals or the key players I just mentioned. So we look forward to, just like Ola mentioned, we look forward to a roundtable discussion between the SEC and key players and founders of various crypto projects and those that are classified as digital asset providers to arrive at a very suitable conclusion, because we believe that we need to arrive at a solution that will be favorable for both parties involved in this. So we thank you so much for joining us on the show, Ola. Do enjoy the rest of your day. And yes, the Binance Blockchain and Cryptocurrency Awareness Tour BCAT Africa is live. It's taking place on the 4th of June 2022 by 9 a.m. at the Amadio Event Center in Enugu State, Nigeria. The BCAT is set to empower millions of people with blockchain knowledge and financial freedom. You can register for this program by clicking on the link in the description. Discover the future. And that will be all on today's program. Check out our website, cryptotvplus.com, to get more market updates and trends captured within the world of blockchain and cryptocurrency. Kindly follow us on Facebook, Twitter @CryptoTVPlus, and on Instagram @official CryptoTVPlus to get daily info on our programs. And please subscribe to our YouTube channel and ping the notification icon bell. If you have any questions about the program, join me in the comment section below. Thank you for staying with us. I am Bobby Andike. See you next week.